Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'm going to give you the review part of the Asian Session Live Market Analysis and the Forecast webinar what I gave on 30th of May, that is on Monday. And today we are on Friday, 2nd of June. So between 5 and 5:30 GMT, I'll try to review the forecast what I gave for this week and try to find out whether the market has moved in line with that of the expectations or against, and what could be the possible move today being Friday, and also the market is awaiting for the non-farm payroll announcement. So in such a situation, what the market is expected to behave, what way it is expected to make the move. Now, first of all, let us see the forecast, what I have given it on Monday. So they made the swing and form up and sideways move and suddenly made the drop on Tuesday and Wednesday, started firming up. And again, they started making the either way stop-ins on Thursday, yesterday, and continue to gain the levels and holding high. And they are holding it at a nominal positive and negative net change at the moment. And they are expected to make the rise before and after that of the non-farm payroll. And towards close, there could be some profit booking move on the downside. So here it shows swing and rise, but after that of the non-farm payroll, the players are expected to make the rise and then do a downward profit booking move in order to lighten their positions. And also they are expected to make a weak beginning false move on Monday, make further downward move before making the further rise, swing and rise move from the top 6th of June. So this is what expected from the market. So they have been making the downward moves we have seen in line with that of the expectations, and the players are making the downward move mainly to buy against their sells in order to take the market to further higher level and book profit again. They will do 2 times the churning move before making further rise to that of the high level consolidation with upward stop and levels. So the players are here to make either way moves in the middle level consolidation. So either way moves with either way stop-ins will come across for another 1 week. Now, with regard to the levels in which the currencies are expected to swing, in the case of euro, they formed the high as 1.1229 and the low as 1.1110, and they could make further downward move next week, early next week, before making a big rise above that of 1.1250 area. Then in the case of GBP, they came down to 1.2770, closer to that of 1.27, and then started gaining to 1.29. So you find everywhere a narrow range consolidation only, and they are expected to make it wide range consolidation for the new month before making the big upward move. And in the case of yen, 110.73 was the low, 111.68 is the high. They could make further rise. And in the case of CHF, 0.9701 is the low, 0.98 they have come to, and they are expected to make a brief downward stop and then start gaining the levels again. Then in the case of Canadian dollar, 1.3428 is the low, 1.3520 is the high. It's such a narrow range, 100 pips consolidation. And in the case of Australian dollar, also only 100 pips consolidation is seen. So it shows that they are primarily focusing on the majors and some of the crosses, especially the commodity crosses, where they find a lot of traders have taken positions, and that is why they are trying to make frequent upward and then downward stop and in order to earn from such open positions. So we need to understand the players just induce the traders to take positions by creating the market sentiment. And if the traders have committed positions in specific type of pairs, then they try to make the moves in those pairs in order to just attract them to liquidate the long position or just go in for a short covering. So this is what happens normally in the market. So this being the first week of June now, the players are here to handle the derivative market also. In the derivative market, you know that the futures and the options and also the forward covers, etc., are all to be handled. And the players handle it in such a way that they need to really make a good stop and moves in the market, and only then they will be able to earn nicely and then take the market to the high level consolidation. Because before positioning themselves to make further rise, they need to book profit with regard to the holding buy positions predominantly and accumulate intermediary level buys. So this is what they do, and the lowest level buy still they will be holding it in order to make a massive profit booking at the highest level. So thereby they are able to earn substantial money from the other market. So the players do this sort of cyclical trade with some portion, and majority of the portions they do the position trade. So we need to understand that. Only then we'll be able to really say in what direction the market is going to make a move. Instead, if you try to look into that of simply the charts and also follow the fundamentals, then sometimes it might work all right, sometimes it might go against our expectations. Then you will not be in a position to really give a prediction for the market. Once the market becomes a surprise, you get the market fear, and that market fear will try to induce you to perceive the market wrongly. As a result, you buy after the rise or sell after the drop and get trapped. There is a question from Prem. So the players do stop and in futures market too. Yes, in futures market also they need to do that. And options market, they have to expire the options. Only then they earn, because they are the writers of futures and options. And once they write the positions, it might be the lowest level sell and the highest level buy in the beginning of the month. Then later on at the end of the month, they make extreme moves and try to book profit in those writings. So it is actually the man-made market. They artificially create demand and supply in the derivative market and then try to do it. It is nothing to do with it of the actual market. Normally, the futures market, futures or the derivative market, is supposed to be a reflection of the spot market. See, in the spot market, if there is so much demand for a currency, then in the futures market, the demand has to be further high, because the people envisage there could be further strengthening of the currency. Then all will try to take forward positions in such currency. As a result, it will go up further and the premium might be high. But what happens? The players create the demand in the spot market, and in the derivative market, they simply say that it is already incorporated. It is already structured in the pricing. So as a result, you find in the futures market, it will be available at a discount. That is how they create an artificial market. So once it is available in discount, then the people will think that, okay, the rise is only short-lived and it could drop. So the traders will try to take in the discounted market a sell position. Some people take buy positions in a discounted when it is available cheap. And later on, if they see profit, they should book it in the futures market. But instead, If they wait till the end of the month or end of the expiry, invariably during the expiry time, they will make one big upward and the downward move in the market, irrespective of the spot market. Irrespective of the spot market, they will make whips or moves towards close and hit all the stops. Because in futures market, you have to pump in more money. If we don't pump in more money, then the position will get closed automatically. But in options market, if you have the position and if the option at the time of expiry is not in the money, automatically by expiry it will get closed. And whatever the premium you have paid for taking the position will be absorbed by the player. So further question. So the amount of traders in volume is not enough to stabilize the quick movements of the players. Yes, the players are doing the moves in the market in a very systematic way. First, what they have to do it in the month beginning, they have to slowly make moves on the upside and the downside and create a lot of feel among the traders following certain vital data release. One such data release is non-farm payroll. This non-farm payroll, which has been taken into consideration only for about from that of 1998, 1999, and before that they have not been giving importance to that of non-farm payroll, and they have been primarily giving importance to that of ISM. So each time they will choose a specific type of data release and they try to make big volatile moves for such data. Now if you see, for the past several months, for non-farm payroll, they are not making any big move. So slowly they will try to focus from that of the non-farm payroll to some other data release. So they will earlier, if I remember about 10 years back, they have been giving importance to that of the interest rate decisions. And then subsequently non-farm payroll. And also the risk appetite, risk haven, and things like that they have been talking about. Then subsequently you find that they are lying low with regard to all the data release and then make big moves after that of the data release. Once the data release is over, then they make independent move, telling that what is going to be the outcome of FOMC, what is going to be the outcome of GDP. That is how they are trying to give a projection in anticipation of a data. But at the time of release of data, they are not making big moves. So they are trying to change, giving importance to that type of data. So ultimately, why they do it, they want the traders to get confused. Nothing more than that. They want the traders to develop sentiments. And only if the traders develop sentiment, then they can do emotional trades. That is why they do that such importance to various type of data release from time to time. So I call all the data release and the technical output like oversold, overbought conditions, etc. as attributes. There are occasions wherein the market has seen when it was overbought at the highest level, people will think that technically it is overbought, so we should be able to do sell and buy trade. When they sell, they'll be induced to do the short covering because their statistics does not say who is overbought, whether the traders are overbought or the players are overbought. If the players are overbought and they are not here to lose, they will induce the traders to go in for the short covering so that whatever they have bought it at the highest level, they will try to book profit after rising further upward. This is what we need to understand. There comes the importance of shift in trading zone. which the charts will not be able to say that. And charts will simply say that the resistance has become turned support, or the support has turned resistance. That sort of information can be given. Beyond that, we will not be able to get actually what the players are trying to do from time to time. If there's any question, kindly ask me. I'll be willing to answer to those questions. Now, coming to the market reading, I noted down the initial lows and the highs around 3:30 GMT, and now you find that euro, it is only a 10 pip spread, and they are not breached the low or the high. In the case of GBP, also 1.2874 is the low. They just breached the low by 2 pips and holding it. And the high is 1.2896, which is intact. And yen 111.31 is the low, 111.68 is the high. They are not breached. Only in the case of GBP, they breached the low and staying below. And you know that it is a negative net change, and euro is a positive net change. So it is mainly to handle euro GBP. They are just trying to form up euro GBP cross before making a further downward move. Then in the case of CHF, 97.07 is the low, 97.16 is the high. They are not breached the low or the high. And 35.06 is the low, and 37.520 is the high. In the case of Canadian dollar, they are not breached the low or the high. Australian dollar, 73.73 is the low, 73.90 is the high. They went up to 93 and came below. So it is again a brief upward stop and to come down, and they could make a downward stop before making a rise. So everywhere you come across range bound moves. So only in the case of GBP and Australian dollar, they are not breached the low or the high, initial low or the high. GBP, they just breached the initial low, came down, now trying to form up only by 2 pips. And Australian dollar, they just breached the initial high by 3 pips and then coming down. So it's all only small swings. So Bren has got another thing, it's a long one passage. So the players do stop and in the futures market to yes. So the amount of trades in the volume is not enough. Yes, I answered it. So would you say even in the futures and options market that the use of stochastics and momentum would not even be of any good in this case? Speaking of the non-farm payroll. Yes. So even in the futures, you will find statistics might appear work, and suddenly when the fundamentals come, they will make just a very big move. Sometimes they may simply hold it even for the data release in the futures market and say that it is only a noise created during non-farm payroll and there is nothing significant. That's what they will give an interpretation. And in the futures market, it will be just tanked. So they will not make any big move, but in the spot market, they will make big moves. They have done several such things in the market. And similarly, there are occasions wherein in the spot market, for non-farm payroll, the move might be for about 30-40 pips on the ups and down, and it will be either way stop ends. And people will say that already it is structured into the in the pricing. But in the futures market, they will make a very big move on the upside or on the downside. So there is no guarantee that the futures market will reflect the spot market. That's what we need to understand. In the futures market, when traders have committed long position in anticipation of a dismal non-farm payroll, so that euro and GBP could go up, that's what predominant of the traders have taken the buy position. And also the non-farm payroll has come slightly less than expected. Then people will envisage euro and GBP to rise. But there could be announcement or there could be analysts talking in the media. No, people are skeptical. They are risk averse and they do not want to commit positions. Even though the non-farm payroll is less than expected, still they are not committing much in Euro and GBP because they are skeptical. That's what they will simply make some announcement using the media. They are all paid news. So when such news come, the traders think that, okay, yeah, obviously when the big institutions are skeptical about it, so it is a risk haven strategy. So they are all going to buy US dollar even though the data is less than expected. All will try to buy US dollar. That means they will sell euro and GBP. This is what you come across every time the interpretation is. Okay, Rick has got a question. Is it likely to see Australian dollar in 0.75 level soon? Yes, it should go even above 0.75 level in this month. Any other questions? So you can answer the questions. So the recommended trades, when they make a downward stop and take a buy, when they make an upward stop and book profit. Either way you can do it. They might go in for a contrarian moves in the market, it appears, because Euro and USD are showing positive net change. That is a contrarian move. And Euro and GBP are showing positive and negative net change. It's a contrarian move. Then when USD yen is showing positive net change, USD CAD is showing negative net change, and USD CHF is showing negative net change. Is a contrarian move. So all along, when people are waiting for the big outcome, non-farm payroll, so obviously the players are trying to handle the crosses. Monday I got some assignment, so I'll not be able to present the webinar. Instead, I will come Tuesday and give you the Asian session live market analysis webinar. Any other question, please? If you got question, you kindly ask me. So this is a forecast sheet. Okay, from YouTube. Kawasaki. Thank you for doing. Okay, fine. Okay then. So no more questions coming forward. So they are expected to make the rise for that of the non-farm payroll, and then subsequently the profit booking move will be coming from that of the mid-US to that of the late US session. Because Monday they need to make a downward move as a week beginning false move before making further rise from 6th or Tuesday onwards as the swing and rise move to continue during the month of June. Okay, Rick has got a question. Do you use more of technical or fundamental? I stopped using the technical and fundamentals because being a statistics professor, I found there are a lot of limitations when the market is being manipulated. The market is not manipulated if it is allowed to behave on its own as a cluster of reactions of the traders. So if you come across a cluster of traders, either they become bullish or bearish and then try to trade, then we can use the statistics to find out which way the market is expected to make the move. But what happens It is a market of the traders against players. The traders' volume is 1/3 of the market, and the players' volume is 2/3 of the market. See, now you find that market is showing small 1 pip, 2 pips move. They're all done by that of the players, because you know very well before that of the non-farm payroll, nobody will be interested to commit a position. But still, they make small 1 or 2 pips upward and the downward moves in the market. Why? They need to give that impression to the other traders at any time the market might show a breakout, so that the traders who are who know very well that non-farm payroll is only by about 12:30 GMT, then in the event, why not we do some scalping for about 10-15 pips? That is what they try to commit when they float the market. So the players float the market by circular trades. That is, they put the sell order from one terminal and buy order from another terminal and then fill it. Only when the trades are filled, you come across the bid and ask are being displayed here. Okay, so the players have to make the momentum in the market artificially so that the traders might commit. So if you go to that gambling den in Las Vegas, any other gambling den, you'll find there will be about 2-3 people playing all the time. You will be wondering, how come this man is playing right from morning till night and he is making a lot of money and he still continue to play them in that den, and you will be wondering why he's like that. It is their own men, so they also stand in the opposite side, and you'll be pretending as if he's making a lot of money by playing that particular game. So automatically, those who pass by will also be tempted to participate. So in the market, the players have just made it like this. So that is why you come across that a lot of hypes created in the market, and thereby they are able to attract the traders. Okay, Rick asked the question, do you trade Forex during the news release? Yeah, I do trade very much. And in fact, about 1 or 2 minutes or 1 or 2, probably about 5-10 minutes also sometime, they make a false move before that of the data release. So those who have been following me for a long time know very well how we should enter in the market during such false move. So when they make a dip before that of the non-farm payroll, that means after that of the non-farm payroll, they wanted to make a spike upward. So if you try to buy before that, you'll be able to quickly exit during that of the upward spike in a matter of about 5-10 minutes. So I do very much trade during such spikes. And if you follow the webinars, what I have given as the spike trade calls in FX Street, before the data release, probably even 1 or 2 hours before the data release, I have given the spike trade calls, the levels you can enter and exit. And I have done the review of such spike trade after the data release. And nearly about 99% of the trades, the market has shown the move in line with that of the expectations, because we can easily identify when a person is cunning, he will try to only cheat you, nothing more than that. He is not brave enough to hit you on your face. He is cunning, so he will only try to pretend as if he is going to be helpful to you and say that, no, there is some dirt on your shirt. That's what he will say. Immediately you think that, oh yeah, there is a dirt in my shirt, and he is really helpful. If you try to remove it, you will find your purse is missing. This is what happens in the market. Any other question, please? Okay, no more question. So let me conclude the webinar. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar. I'll come back on Tuesday and give you the forecast for the next week. And during the non-farm payroll, they will try to make a downward move to start with as a false move before that of the data release. And after the data release, they are expected to make one upward move and then do the profit booking and start making the slide. People will be wondering why it is making a drop again to its close. They will simply say that it is a weekend profit booking, or sometime people are unwinding the position. They give a lot of attributes. Basically, the players lighten their positions and make use of such data release as a profit booking opportunity, create the hype in the market, and make whips or moves and hit the stops and just liquidate their positions. And later on, you find again next week they will start with that of the week beginning false move on the downside, inducing the traders to feel that market is going to be bearish. And once the traders start taking sell positions, the players are here to rise the market and induce the traders to do the short covering. This is what every time they do it. Still, I'm trying to explain to you, and you find it very difficult to get convinced sometime. But if you watch it with this perspective, you will be able to really understand it is a man-made market. So men are trying to cheat other men, and don't become the victim again and again. A wise man does not commit the mistake again and again. Wish you all the best in your trades. See you on Tuesday.